All right, good morning, folks. Welcome into Train and Trade. We've got Chuck Crow here. He's going to give his market update in just a minute or two after I introduce everything this morning. And Tom's going to join us real soon as well. Tom's teaching a little small event in Ponte Vedra today as a courtesy to young teenagers, I guess it is. I guess it's maybe 10 years old up to 20, lower 20s, I guess, in Ponte Vedra, as a thank you to the folks down there. So but he'll be joining us to give his market update during the morning today. But hopefully you all had a great weekend. And let's kick things off here. Of course, there's risk involved in trading. Past performance is not indicative of future results. Again, Tom's going to be on to give his market opinion. He gave it overnight and last night for planning, and he gave an update on T-Buzz TV this morning. He basically said the market was, open higher. Don't be surprised if it pulled back to the highs from Friday, which it has done so. And now we're just kind of hanging out at the highs from Friday. Got a couple alerts from Tom you can set on your platform as well. A NASDAQ alert of 23,550. Current price is around 23,500. And the S&P needs to get above 6435. 6435. So those two numbers, 6435 on the S&P futures. And I'm going to type this into the chat here, 6435 on the S&P futures. And we got 23,550 on the NASDAQ futures. We have any questions on those two numbers? Okay, so let's move on here. I want to give a quick review of just kind of the plan for the week. We got Train and Trade going on now. We got futures first tonight at 7 p.m. Eastern time. Every Tuesday we do T-Buzz Connect the Dots. That's at 10:45 Eastern time for all of our T-Buzz All-Stars folks. And we've got SPX training this week, training and trading from Tom at 11 a.m. on Tuesday, Wednesday, and Thursday. So be sure to tune in for that. That's brand new. Tom's offering that 3 days this week as a bonus to everybody. So be sure to be there for that. On Wednesday and Thursday, we have the mid-year strategy class from Tom. We spoke about that about several weeks ago, maybe 3 weeks ago or so. So part of that, look for that on Wednesday and Thursday, the mid-year strategy class. At 4 p.m. on Wednesday, Tom's doing a 2025 market pivot update. That should be interesting. Got a key time of the year going on right now. And then we've got midweek market update Wednesday night at 8 p.m., of course. Tom will be live Thursday morning at 10:30 like he always is for the Academy. It'll be an open house session, followed by his SPX trading at 11. That's on Thursday. And on Friday, we've got a 10:30 open house Friday morning. We've got another train and trade on Friday because it starts August 1st. And as you know, or if you don't know yet, train and trade is going daily and on August 1st. So we've been doing train and trade every Monday. All throughout August, Tom's going to be live every single day of the week at 11 a.m. Eastern time, Monday through Friday. Then, of course, we'll finish up the week on Friday with the weekly wrap-up. We always do that at 3 p.m. All right, so let me know if you have any questions on the schedule. Yeah, that's right, Jim. On Thursday, we do have at 4 p.m. Eastern time, we got our last Futures First advance. Thanks for pointing that out. Finishing up July with some more advanced Futures First. Let me go ahead and get these slides shared for everybody that wants them. Pete, to be a part of the mid-year strategy class, contact Kelly or Jeffrey. So I'm going to put their names and email in the chat. Kelly Barber can be emailed at barber@dtitrader.com. That's BARBER at dtitrader.com. Jeffrey Ondraka can be emailed at ondraka@dtitrader.com. ONDRACKA@dtitrader.com. What else we got here? Futures First Advanced is in addition to Futures First Education. Michael, thanks for asking. Futures First Advanced was, well, at least so far, it's just during July. So it's coming to a close. Tom may operate again in the future. All right, news for the week. Tomorrow morning, we have consumer confidence at 10 a.m. So remember, it's at 10 a.m. Sometimes those are hard to remember since the market's already been trading for 30 minutes. But consumer confidence and JOLTS job openings are tomorrow at 10 a.m. Eastern time. The Fed meeting does start tomorrow as well, which of course means on Wednesday at 1 p.m. we've got FOMC statement, or 2 p.m., excuse me. Thinking my time, Central. 2 p.m. Eastern on Wednesday is the Fed interest rate statement, followed by 2:30 press conference with Jerome Powell. Before that, though, we got GDP released in the morning time. So at the very end of every month, we have GDP, usually the day prior to the last day of the trade month, and then we have PCE the very next day. So that means that on Thursday morning, we've got PCE. Both GDP on Wednesday and PCE on Thursday are at 8:30 a.m. Eastern time. We've also got jobs claims on Thursday morning. And then on Friday morning, we finish or start the new month with non-farm payrolls from the employment situation, which is another big one. So we got a really big news week with the Fed and Powell on Wednesday, and then some heavy hitter reports like GDP, PCE, and the employment situation. So stay tuned in. Earnings this week. Also, heavy hitters on Wednesday and Thursday. So Wednesday you get the Fed, and then Wednesday evening you get Meta and Microsoft. Robinhood reports that day, Carvana, Lam Research, Qualcomm. Thursday, you get Apple and Amazon. So again, it's a busy week. Need to pay attention. Here's Tom's 10 tickers for the week. We got the, like I mentioned earlier, Tom said expect to pull back to the highs for Friday. We're kind of hanging out right there. If I mentioned we have alert set at 6435 on the S&P and 23,550 on the NASDAQ. All right. And we got to have that happen first. Always think bigger picture. What's the S&P and NASDAQ doing? It's going to be a lot easier to trade these 10 tickers if you have the S&P and NASDAQ following suit. Doesn't always have to be like that, but the odds are more favorable if you look for that. What else we got here? We've got the first 3 days stocks. So let's go ahead and get this updated. As it stands right now, it was updated Friday afternoon. I'll go ahead and update it now. So it is July 28th at 11:15 a.m. Eastern Time. So what you're looking at here is you have a month open for all of these tickers. Over here to the right, we want the current price to be above the month open, to be thinking bullish. We're almost 200 points above the month open on the S&P futures, so we're definitely bullish on the month. Then we have what's called the FTD high and FTD low. That stands for first 3 days. And we're talking about the first 3 trade days of the month. All right, so what we do is we monitor the month on the first 3 trade days. We mark a high and mark a low. The high from those first 3 trade days could come from day 1. It could come from trade day 2, or it could come from trade day 3. All right, it's just marking the high and the low from the first 3 trade days of the month. In the month of July, the 3-day high came from the 3rd trade day. In fact, the first 3 trade days of the month, this month, made a higher high, higher low every instance. Once we got above the 3-day high, we really broke out to the upside. And let me just show you that visually here. First 3-day high of the S&P futures was 63.33. And the first 3-day low was 62.27. If I switch my screen sharing over to this roadmap chart, you will see an orange line at the high, and that was day number 3. And this is an orange line at the low, which was established day number 1. You can see it took a little bit of bouncing back and forth, trading inside that range for the market decide which way it wanted to go. One clue, though, it never took out the month open or that low from day 1. So you can see this candle here, even though we were trading inside the range, we were still holding that month open, which is the middle orange line. We came down to test it here to flush a few people out, and then the very next day they closed it above the first 3 days range, and as they say, the rest is history for the month. Now we do have 4 more days to go. And if you look at that blue line across the middle of your chart, or the chart there, that's the weekly open. So you can see we've pulled back down here to the highs from Friday, and you got the alerts that we're looking at. If we can get above 64.35, you get the NASDAQ above 550, we'll be eyeing a move back up to the weekly open. Any questions on all that? I'll post the slides once again. All right, going through these tickers here, let me reset the screen sharing. Look at a few notables here that Tom's been watching. Coinbase, Amazon, AMD up top. Robinhood, they have earnings Wednesday. Meta has earnings Wednesday. Microsoft Wednesday. There's NVIDIA. Palantir. You can see most of these stocks are bullish for the month of July. Micron's been a very strong stock. It turned weak this month and kept us out of the trade. So you can see how valuable this is. Micron's on our list, but Tom hasn't touched it this month. Why? Because we follow this process and it's been weak. We're at 111. It's pulled down. It's 11 points below its month open. So Micron is one of the strongest stocks of the year. Last time I checked it before this month. So it's still a strong stock. It's just having a down month, which is not a bad thing necessarily. Consolidation month is not a bad thing at all, but that's why we follow the monthly process. Next month, we have a start of a new month, which is the start of another race, if you will. The stocks can have a chance to reset. Micron, for instance, on Friday morning, since it's the start of the new month. I'm going to turn it over to Chuck. I'm going to take 5 minutes here, throw up a clock, and we're going to take 3 minutes. And when we come back, Chuck's going to give his market update. Let me make sure. I'm going to give it 3 minutes to make sure Chuck is ready to go. But let me get this clock showing. We'll be back in 3 minutes. Chuck's going to give his market update.
All right. Good morning, everybody. How are y'all doing today? So, Tom asked me to pop in on the train and trade session this morning. And let's see. So, we got that timer out. Jonathan is taking us back over to the roadmap software. And as you can see, we've got a little bit of a move here. The market dropped down to 64.1650, which is encroaching on Friday's Genesis bar, and we want to kind of keep that in mind. We track these reference bars, not just the most recent one, but the ones prior to that. And you can get kind of a big glimpse. Yeah, there we go. Jonathan pulling up that Genesis bar there. You can see that the market has come down. Notice how the sell zone on this compass, I love the fact that you got the compass up here, Jonathan, but the sell zone begins at 64.16.92. The low today 64.16.50. So everything's just kind of lining up right there. So we dropped below that 24 area. Tom mentioned this morning that he was looking for that support to be between 31 and 24. We see the market drop down through that. Of course, we tried to climb back up. Jonathan mentioned the 35 number. I'll be honest with you, Jonathan. I had a buy stop sitting at 35 quarter. So you and I were like, we are definitely learning from Tom. That number was definitely there. Can you point out which is the sunrise bar in this chart?
I'll talk about sunrise a little bit later on. Yeah, we'll
Okay.
do that.
All right. So I'm going to let Jonathan handle that. What I'm looking at are the reference bars that we have throughout the day, and not just one, but we got a couple of them that we're paying attention to. Now, with the market currently at 64.2175, the big thing that we've done and that we expected to do this morning, we retraced that gap open. Market opened at 64.50 last night after closing at what was Friday's close? 64. I want to say, was it about 28?
That's it. Yep, 64.28.
28 quarter. Okay. So we've made that retracement. The market's kind of corrected itself. And now we're going to move into the afternoon market. We're going to get the European cash close in just a few minutes. And we're going to track what the market does from that European cash close to the next full hour. That's, of course, the Genesis bar, and get some sort of a sense of we got the night and the morning and the weekend all taken care of. Now let's try and see where this market's going next. Now, of course, there are some things that you have to take into consideration this week in particular. We've got the FOMC. That's not something you see every week. We're going to close out this month on Thursday. That's not something you see every week. And of course, we have earnings. The big names that you probably recognize: Microsoft, Meta, a few others though. For those of you in the finance world, Visa, Mastercard, and hey, if you're not into finance and you're not into tech, how about pharmaceuticals? P&G, Procter and Gamble reporting, and Merck also reporting. So the M&M boys, yeah, we've got a lot going on this week, a lot of things that can really shape the market and define the market. And of course, we end that definition on Thursday and we begin a new one, as Jonathan pointed out, the race for those first 3 days on Friday. So we're expecting kind of a tumultuous market. And what we're going to do as we go through this is find out where those dividing lines are, trade each day as it comes, understand what's coming next, but just work on the information we have. And we've got some pretty good information in the market. I think the biggest thing that I'm taking away from what occurred overnight is that the new all-time high set in the overnight market is now 64.5775. So when I look at this market and I say, what's the reasonable area to challenge if this market does decide to bounce off those lows? Well, we've already got a target up there. And that's always great, because whenever you're breaking a high, you always want to know where you're running to. And the market has given us a pretty good glimpse of that. You can see the way that the overnight trading occurred. I think one number that I'd want to tell you to pay special attention to, you'll notice how the market dropped down to about that 34 area, 34, 35, which is why we're looking at that first bump up. You can see the little bump, that green bar. There you go. That's the one. So what's the high on that bar? That's at 64.40 quarter, right? And okay, yeah, we're going to get there. But basically, that 64.40 quarter is a pretty big level. So you got Tom looking for the break at 35. I am too. That break gets confirmed if you go above that 40 level, which, by the way, interesting. For those of you who have Roadmap software at home, where's the buy zone on this compass? It's at 64.41.08, right? So if you don't have Roadmap software, here's just a tiny recommendation. Maybe think about getting it, because the sell zone begins a little bit above the Genesis bar from Friday, and the buy zone begins at that little bump high that we had after getting down to close to the 31 area. So the chart here is doing a good job of explaining everything, and all I'm doing is pointing it out to you, and you can see Jonathan throwing in the little lines in the chart. But the big ones are displayed by this chart by looking at the buy zone and the sell zone. A little bit off on the targets. I think the targets probably need to be a little bit tighter, maybe, but we're still kind of leveling out that average range. So you'll notice the buy target goes up to, well, hang on, you just switched over on me, didn't you? But the buy target going up 64.42. Did we We just switched some time frames here.
We did just hit the Genesis time frame, and that's what's neat about this software is it updates due to time of day.
Oh, okay, there you go. The start of the Genesis bar. The clock did it
Right.
for me. Okay, if you can roll that back just one, like, can you move the chart back one? And then okay, well, that didn't take away the bug. Okay, there we go. Well, never mind. It used to be that you could
Yeah, it's done.
make that go away.
We
Doesn't
took
do
it
that now.
away.
But what we're
They took it
seeing,
away.
oh, it did. Okay,
I think they took it away, Chuck.
yeah, yeah. It used to be a great little tool. But anyway, what we've got here is a market that is showing us everything we need to know about it. And now we move to that next step. Let's redefine what this looks like. Notice here the buy zone showing up at 31. I still think it's probably at the 35 area, but as the market develops, you have to be able to adjust to it. The sell zone coming in a very similar spot. So we have moved down, tighten the market, and we're going to look to see where this goes. Now, again, the big thing, this is a Monday. This is not a Tuesday or a Wednesday or a Thursday or a Friday. We're trading on Monday, or we're looking at the market on Monday. Monday is when you get the definition of what the market's going to look like. Now, again, this particular Monday, with all the news we've got, with the earnings reports, with the FOMC on Wednesday, with the new month beginning on Friday, be careful about getting too tied up in what the market's doing because there's going to be plenty of opportunities for it to change. But right now, you can just see how that S&P futures in particular is developing. Like, here's the neat thing about this software. We can look at that same development in the NASDAQ, which, by the way, is in QU25. We can look at that in the Russell futures. We can look at it in the Dow futures. We can look at it in your favorite stock, and you get to see that full development process. Here's the NASDAQ. Looking at those numbers, you can see how this is lining up. Got a few numbers highlighted there for you. RB3 lining up the market, and of course had that dip down. That's as the S&P went to that 16 area. We see that the similar number in the NASDAQ got a little bit more of a push down towards the bottom there. But it basically was reconnecting into Friday's market. And that's the first thing you expect the market to do. The second thing, figure out where we go from here. And that's what the market's going to do next. So, my recap of the market is, look, all these numbers make sense. We're lining everything up and we're about to find the next step. So with that said, gentleman who's done the best job I've seen of finding that next step, we'll see if is Tom ready to go here, or do we want to take a break, Jonathan, before we bring Tom in?
Here's what we're going to do. We're going to take another short break. I'm going to come back and talk a little bit about MTI by DTI. And then closer to the end of the hour, Tom's going to get on and join us. And he might even have a trade. So stick around. We'll throw up let's give it 5 minutes. Come back, talk about MTI by DTI. And we'll keep train and trade going. Thanks again for being here. We'll be back in 5 minutes. Thanks, Chuck, for your time. That was great. Appreciate you popping in. All right, let's jump into some discussion of MTI by DTI. What MTI by DTI is called the market timing indicator. It is a indicator that Tom has been building out on the Thinkorswim platform from Schwab. It is a neat, fantastic little indicator. It's very simple, called market timing indicator, MTI by DTI. And by the way, it's only available for Thinkorswim. And as we discuss it here, if you decide you are interested in getting MTI by DTI, you can go to dtitrader.com/MTI. You can get that link typed into the chat for everybody. So, number one insight when using MTI by DTI is, and this is not just for MTI, but in general, you got to think bigger picture. And at the top of our MTI charts, I'll show you a live chart here in a second, but at the top of our MTI charts, we give you a yearly open, which on the S&P futures was 59.49. You can see we're now up 8% on the year. And I can't remember exactly the month that we got above 59.49, but ever since we established ourselves above 59.49, I think it was in June when we got above the yearly open. I remember it was the end of May going into June. And then the first 3 days established in June above the yearly open. We've been steadily trending higher since then. So that's the very first insight need to remember on whatever you're looking at to trade is where did it open the yearly open, the year open at? That was 59.49 on the S&P futures. We're 8% up on the year. Then on a monthly basis, of course, we're coming to the end of July, but on a monthly basis, we of course go to the monthly open. So that's that next number there of 62.45. And we're about 3% up or so on the month. And again, once we got above the July first 3 days high, as I showed you a little bit earlier, the market's been on a nice little steady trend the last week or two. On a weekly basis, we get a chance to reset everything again. 6406 is the, let me make sure that's correct here. 64, let's see where it's 6406. I got 6450 as the true month open, so this has not updated yet. That must be the week open from last week. So after the first trade day is done, it should open that new week open 6450. The daily open is correct at 6450, and that box is red since we're down below that. So the way the color coding works is if the current price is above that open, the box is green. If the current price is below that open, the box is red. You can see on the daily basis, even though we're strong for the year and the month, today, the first day of the week, we're a little bit on the weak side, 64.50, as we pulled down to those highs from Friday. So think bigger picture. That's going to help you in your trading. We have it right there at the top of the MTI charts. Number two, got to know the monthly open. Now, I mentioned it monthly open as far as one of the metrics at the top of the chart, but we also include a gray line on the chart itself. So this gray line, you can see it kind of shifted way up here, and then it's gone flatline, of course. And it will only shift one day of the month, the new month open. So the first day of the month, that gray line on the MTI chart shifts up or down. In this instance, it shifted up from June to July. And you can see there how the S&P futures have nicely found support at that month open several times during the early stages of the month. This high right here was the FTD high. And you can see visually, right when we cleared that high, we've been trending higher ever since. Made a high of 64.57 overnight. Any questions on that? This is very important information with regards to Tom's methodology and how we trade the markets. Think bigger picture. What's it done for the year? What's it done for the month? Then we start to narrow it down. What's it doing on the month? How's it behaving off the first 3 days? In terms of the month open, are we above that gray line on the charts? Or is the box at the top left of MTI, is that green or red? See how we're keeping it simple here. with MTI by DTI. Once you learn what it's telling you, everything's very, very simple. Robin, the MTI by DTI does not update automatically. You can grab the updates on our membership site. Just go to oneclicktrading.com, head over to the market timing indicator section, and you'll find the updated codes for installation over there. We've had several updates over the past year, so will definitely want to do that. And on the install page, you're going to find some tutorial videos to help you out. The old daily charts, you'll notice, look a little bit different than the new daily charts. I'm showing you the new daily charts today. So we're real big about keeping it simple. That's why we made the update. It's simplified. The old charts had a little bit more going on. This simplifies it. A very clear picture here. Number 3, of course, is to follow those MTI lines. And those MTI lines are those white lines you see moving up. Now, the MTI white lines are based off of Tom's process of the first 3 days of the month and the week start of the month. So you mentioned, or you heard Chuck mention earlier that today is Monday. Monday is an important day of the week for us. Monday, for the most part, is a watch day of the markets based on our process. Similarly to the first 3 days of the month where we're doing a lot of watching and waiting to start trading more heavily, the first day of the week is the same sort of thing. We watch the markets on Monday, see how everything's behaving, where they want to take the markets. That's still up in the air in today's market right now. We pulled back to Friday's high, as Chuck said. Now we've got to figure out where they want to take it. So that's still up in the air. All right, we'll see how the rest of Genesis bar forms, which we're about 14 minutes away from the Genesis reference bar forming. And then we get to trade the markets without European influence for the rest of the day. Actually, we're trading right now without European influence for the rest of the day. But our reference bar called Genesis has about 14 minutes left to form. And we'll go from there. After a little while, we'll show you the roadmap software where we can actually see those reference bars. And that should be a good review for everybody. But follow your MTI line. If you look at that chart on the screen right now, you can't help but think bullish, right? You see that gray line shifting up with every new month that comes on board right now. And you see those MTI lines trending up and to the right. This is an ideal trend we have on the S&P futures. And of course, if the S&P futures are trending up, what's happened to the majority of stocks out there? Majority of stocks are also trending up. Now, I want to make a point that Friday is the first day of the month. And remember, with every new month, things have a chance to reset. If you go look back in any trending market, you will find months where the stock goes sideways or it has a decent pullback. But usually it has a tendency, unless it's on an earnings report, which we are in earnings season, but usually it has a tendency to do it on a month-to-month basis. So the start of the new month is an opportunity outside of earnings news or just broad market economic news where stocks can take a shift. And so the start of a new month is a very important time. We're coming into that Friday, August 1st. And we'll go from there with following the first 3 days process, just like we do every single month. And we'll go from there. Of course, on a weekly basis, we're doing the same thing on a much shorter time frame on a weekly basis. You can see that bar right there is red. The week open is 64.50. So you should not expect Tom to enter a lot of long trades unless we can get this S&P futures back above its weekly open, 64.50. This is how we think about the markets and how we want to get our education across to you, so you start thinking the same way. Number 4, narrow your lists of focus. Too many times we have too many stocks we're looking at. And similarly to, multitasking is a very hard thing to do. Managing too many symbols is also a very hard thing to do. So you can narrow your focus with, that's what the scanner is for. You're looking at the orange box there is circling the daily scanner. If you're thinking bullish, which we are because the market's very strong, we're thinking on those green boxes, right? The ones that are not color coded are stocks that are neutral. They're kind of in between their buy point or sell point on MTI. Stocks that are red are weak for the month. Costco is weak for the month. Lulu is weak for the month. SQQQ is inverse to NASDAQ, so it obviously is weak for the month. So narrow your focus with MTI, the MTI scanner. And the daily scanner, the way it works is very simple. If I go back a slide and show you the S&P futures, it's above the MTI lines, above the month open. It's going to be, because it's above the month open, above the MTI lines, it's going to be green on the scanner. You can see it right here. And it says as long as the S&P can stay above 63.65, it's going to stay bullish. So using this and looking at that number, you can say, all right, well, the S&P is bullish above 63.65. I should be thinking to buy it because it says MTI says we're bullish. We're above the month open. But today we've been selling off. So do I want to short it? Well, if you're a scalper, if you're a day trader, then, if you're comfortable risking your money, then, trade however you want to trade. But we're thinking to the long side because the overall trend is bullish. We have everything right here showing you that. All these indicators trying to get you to the same conclusion that the market is bullish. We need to be thinking to the upside. And number 5, you can let the intraday charts, excuse me, the MTI intraday charts help you with your timing. So I mentioned all this where we're strong for the month, strong for the year, but we've been selling off since the open last night, or since Europe came on board last night, we've been selling off. You can kind of see during Europe, if I just draw a red line right here, this is about where Europe opened up, and we broke to a new low on the day, which signaled a retracement back to those highs from Friday. So we've pulled back to the highs from Friday. This is on the SPY. And let me go to a live chart here. But what we can do is we can use the MTI intraday chart just to help us with our timing, help us stay on the right side of the market here. Remember, I mentioned that we're thinking bullish. So if we're bullish on the month, but we started the day a little bit on the weak side, we can use our MTI charts to figure out, okay, well, where is this market going to strengthen up? So you should be seeing a live chart now on the S&P futures, a 30-minute chart. And we have our two white MTI lines. One of them is at 64.35 level, and the other is at 64.41 level. Now, we really want this price to be above both of those MTI lines, so 64.41. We also know that Tom's pivot today is 64.45. So if we get above 64.45 on the S&P futures, we will have cleared that 65.35 level that Tom and I pointed out, or Chuck and I pointed out, excuse me. We will clear the top line of 64.41 on the MTI intraday chart. And then we'll be above Tom's pivot. All right. Now we also have the week open at 64.50, so you should expect a little resistance there. And then above that, we're going to be looking at new highs. So you can kind of see how you can gather everything we've done today, whether you know it or not, is essentially reviewing Tom's education on tape reading, if I had to simplify it to one sentence. That's what we've been doing. We've been finding key numbers to figure out where is this market, what is it doing, and where is it going to go. So let's take another, let me see, might have some questions before we take another short break. Let me know if you have any questions about what we've covered. There are some questions in the chat, so let me review those real quick. And then in a moment, we're going to take a short break. And I think Tom's going to be joining us soon. Like I said, he's teaching that class, a Young Eagles class in Ponte Vedra this morning, but he is going to be here and he is going to give his update on the markets. Hopefully you've enjoyed Chuck and I giving our insights based on Tom's education that he's taught us for so many years. All right, Robin says, I vaguely remember Tom saying something about the second half of the year. The July numbers are more important than the yearly open. I may be imagining that, but can you confirm either way? Yeah, so Robin, that's a great point. Some of that depends on how far we've moved away from the yearly open. So as the year starts, the year open flat out is the most important level that we track. And as the months go on, we update the numbers with the monthly opens and our first 3 days numbers and whatnot. But we always have in our back of our mind where the year open was. The year open this year was relevant for quite a while until June is when we started breaking out of that. So we're now what 59.49 was the year open. So we're now what was that, 500 points above the year open. So the July open can hold more importance. The July open being at 62.45. And that's a good way to think about it. As you move further and further away from the year open, the individual month opens are going to be more and more relevant. All right.
Hey,
And
Jonathan, let me jump in real quick. Okay.
go for it.
All right. Let's do that. Let's do that AMD trade we talked about. Okay. Uh, you go out to the 28th of July. And pay where's it trading at right now? About 90 cents.
Tom, the 2:30 call for AMD is August 29th, paying around 75 to 80 cents right now.
All right, buy that one and then make 25% on it.
Okay.
I'll see everybody later on today.
So I'll just get that typed in the chat for everybody. Current price is around 75 to 80. And Tom's targeting about 25%. If you paid 80, 25% would be $1. So that's targeting roughly 94 to 99 cents. Good for cancer. All right, Tom had a room full there, it looked like. Neil paid. Okay, Neil, thanks. Yep, that is the same trade we sent to Moonlight a little while ago. So if you're getting in now, you're getting a little bit better price. Still holding up here though. The market is just sitting here at those Fridays high, that Friday high level between 64.20, 64.30ish, that level. We still have our alert set at 35 on the S&P futures and 550 on the NASDAQ. So sometimes you just got to be patient. Just got to be patient. That's especially true on a Monday. Especially true on a Monday. Hey, let's take a short break. We're going to come back and talk about the roadmap software. We'll take another let's take 10 minutes this time, 10-minute break. We'll come back and dig into the roadmap software. All right, let's dig back into this education today. We're going to switch over to the roadmap software, which is Tom's proprietary software that he's been building for over 25 years. It is quite the feat that Tom's done with this roadmap. Let's talk about it. Number one, we have a very useful feature called the trade tracker. All morning we've been talking about how to track the markets when the month opens and what we do with the first 3 trade days of every month that Tom has taught us. And this feature kind of captured it all in one. It also includes the week starter, the Monday high and low. So everything we do, all of our most important steps to trading each month and then each week is captured in this one feature. All right. Now the market's, more involved than just a couple of columns, but this table goes a very long way to keeping us thinking clearly here. So we have a column called the month open, and the reason why that month open box on the S&P is green is because the current price of 64.27 is above that month open. We skip over here, we have the high and low from the first 3 trade days of the month. You can see both of those are green because the price is above those levels. And then we have the week start numbers. Now the week start numbers are currently forming, but so far the high is 64.7 from last night and the low is 64.17 from this morning. And so those might update as we trade through this week start day or the first trade day of the week, which is Monday. But so far we've got more green than red. Red, of course, means on the week start high, 64.57, we are below that. So the last or the week start high box is red. And the last box changes green or red based on the midpoint from the first trade day of the week. So once you know all this, you got a lot going on, but you can quickly figure out, okay, well, if we get the month open box green, the last box green, the first 3-day high and low box is green, and the week start box is green, and we're sitting pretty good. So on Tuesday, Wednesday, Thursday, and Friday, looking at this trade tracker, that's what we look for. We know we're strong for the week. For the rest of the week, we're going to be looking for the S&P futures to get above that week start high. That's how this week is shaping up. And we can get all that information very quickly with this feature inside the roadmap called the trade tracker. It's under tables for anyone that uses the roadmap on your own. We look down here at NVIDIA. You can see 4 greens in a row. That's a very good sign. And it just needs to be above Monday's high. Today it made a high of 65.54 this morning. And that would really trigger it into another buy signal here, either today or later on this week. Remember, the Monday is usually the start of the week. Sometimes Monday's a holiday, so Tuesday's market will be the week start. But on most weeks, Monday will be the week start high and low. And we use most of the day to kind of watch and monitor, make sure the underlying trend is holding shape, and then we go from there. Can I repost a slide link? Yep, absolutely. Let's see here. So if we look at this trade tracker, we can see the opposite on bonds. Bonds are very weak. They're weak on the month. Right? Below the FTD, actually right below the FTD low. And if they fall below 113, they'll be continuing that monthly trend for the week if they can get below 113.03 later on this week. Of course, there's a big asterisk this week because we got the Fed on Wednesday. Got to keep that in mind. Feature number 2 is one we don't talk about, but it's a very useful feature, I think, on Monday mornings. This is called Numbers That Pay. It's also under tables. And what it gives us, we can very quickly see where the market made a high-low range from the previous week. And we can see the S&P made a high last week of 64.31 and the low down at 63.18. The average true range from last week was 39 points. I'll show you the value of that here in just a few minutes. We also have the week open, the week start open from today is 64.50. Actually, that happened last night. We have the month open, and we have the prior day high and low. So not only do we give you the range from last week in total, Monday through Friday, we give you the range from Friday alone, because sometimes we're not going to be trading at new highs above last. We're not going to open up at new highs above the prior week's range. The market might have been weak the week before, bearish the week before, and we might need to compare the market to Friday's range. My point is that Friday's high of 64.31 is the same as the last week's high, and that's not always going to be the case. So the prior day's range is very important to us as well on a daily basis. And if we go back to our simple patterns here, I'm just going to draw over this ink. Hopefully you can see these red lines. Remember these three patterns. If we have two bars form and the second bar makes a higher high and a higher low, that's a very bullish pattern. That's a simple buy pattern. If we have two bar form and the second bar makes a lower low and a lower high, that's a sell pattern, very simple sell pattern. And the third one, of course, is we make two bars and the second bar makes a lower high but a higher low, or in other words, an inside bar. That is a stay out bar. Then, of course, you got to factor in the element of time. A lot of times we view Monday as usually being not necessarily an inside bar, but the same characteristics of an inside bar. Meaning that when we start the week, you're going to have traders out there deciding what the actions they want to take. And there might be a little bit of confusion, a little bit of bouncing back and forth before we go throughout the rest of the week trading off of Monday's range. So even though Monday might not be an inside bar, it can have the same characteristics of an inside bar. And the same can be said on a much larger scale when it comes to the first 3 trade days of the month. It can have the same characteristic. And you found this month, actually, in the first half of the month, we were kind of range bound before we broke out. So that's numbers that pay. And by the way, the boxes that are green here, if the last traded price is above all of the other numbers out to the left, then the box is going to be green. Number 3 is you can track the past 2 reference bars with our newest feature of the roadmap called Sunrise. Newest feature of the roadmap called Sunrise. If you're familiar with our compass charts, and I'll show that real quick. Our compass charts, we like to bracket the prior 2 reference bars. So you can see on the S&P futures, RB3, this blue bar right here, made a high of 64.32, while Genesis that just formed, or RBZ, this white bar, made a low of 64.23. You can see those magenta pink lines forming a bracket. It's at the high of RB3 and the low of Genesis. The reason being, we take the past 2 reference bars and mark the high and low of those 2 reference bars and go from there to form a frame. And then we look for the market to push out of that frame. So it's still lining up nicely with our 64.35 number today. As we've been talking about all day, it requires some patience on a Monday. And we just wait for the ideal trade setup to pop up. But this frame on the chart is, and let me show you on the SPY, 637.84 high, 636.99 low. You can see on the frame numbers, 637.84 high, 636.99 low. If I go back to that table we call Sunrise, that is exactly what the Sunrise table is doing. It's marking the high and low from the prior 2 reference bars. It's just putting it in table format for you. so you can more quickly see what stocks are breaking out above their RB frame or what stocks are breaking down. It's no coincidence that we've been talking all morning about having patience this Monday morning. It's no coincidence to see the sunrise saying everything is out, meaning everything is trading inside the range of the past two reference bars. We have a sideways market going on right now. On the SPY, you'll see that RBHHI of 637.84 that we just pointed out on the chart, and the low of 636.99 that we just pointed out on the chart. So you can see we have all these features that Tom has created inside the roadmap, all focused on this column labeled LSO, long, short, or out, answering that question of long, short, or out. It's really feature upon feature, almost an endless amount of features inside the roadmap to get you thinking on the right side of the way the market is moving on that particular day, that particular week, that particular month. Feature number 3 is, of course, the roadmap compass chart. And I want to go back to a live market here to really show you how you can use, and we're going to circle back here to this ATR number. ATR is a very interesting data point in the markets that we track every day. And I mentioned that last week, the average trading range for the 5 days that traded last week was 39 points. So you have to ask yourself, how can we use that information? And this is not an exact science, but it's very interesting to use ATR to see and track how the market behaves. If we take the overnight range of 64.57 and we subtract out 39 points, the ATR from last week, what do we get? We get 64.18. And let me just do this. I don't think you can see my calculator right now. What I did is I took 64.57, the high from overnight, and I subtracted out 39 points, which was the average true range from the 5 days that traded last week. And as a reminder, we got that feature, or we got that number on step 2 of today's Roadmap Insights, which was using the numbers that pay feature, which is under tables. It gives you the ATR, which is the 5-day average true range. And because today is Monday, that would be the average true range from the 5 trade days from the prior week. We asked, how can that be useful? I showed you one little trick that you can monitor. I took the high from overnight of 64.57. I subtracted out that 39 points to find 64.18. And if we look here, the low of the day, this low right here, tells you over here on your compass charts as well, is 64.17. Now again, there's not an exact science. It's just something to look out for. And you'd be amazed how often that average true range plays into the market like it can. Now, the sunrise feature, the numbers that pay feature, or excuse me, the numbers that pay feature that we talked about today, and the trade tracker feature that we talked about today, those two features are included with Roadmap 2024. So if you have Roadmap 2024, you should have access to those under tables. You can download the most recent update to the roadmap on the member site, oneclicktrading.com. The newest feature of the roadmap, called Sunrise, is located under tables for everyone that has the VIP roadmap. So if you have Roadmap VIP, you might just need to update your roadmap. Once again, located on One Click Trading. So be sure to do that if you're a Roadmap VIP member or Roadmap 2024 member looking for those respective features. Of course, this is the roadmap software. You can go to dtitrader.com/roadmap to learn more about this software that Tom's been building out for 25 years. The last feature of the roadmap I want to talk about today is the ETR page. And for this, I'm going to take us to a live market. This was taken half an hour ago or so at this point. Let's see, that was taken at 11:08. So 16 minutes or so ago. and we'll stay here on the static page, but 16 minutes ago, what the ETR page does is it tells you 30-minute opening prices. So if you look on the S&P here, you can see that starting around 4 a.m. my time, or maybe sooner, whenever Europe came on board, the S&P turned red. So did the NASDAQ, so did the Dow. So over Europe, they were bringing the markets down. All right, and these times are in Central Time. We get into the pre-market hours in the US, and we start seeing more greens. Why do we start seeing more greens? The way the color coding works on this tape reading function, the ETR page, is if the next opening price is higher than the previous, the box gets a green color code. So we look at this starting at, let's see if I can get rid of these red lines. There we go. Starting at 7 a.m. my time, which is 8 a.m. Eastern time, we had a higher print on the S&P futures, 64.35, which was 1 point above 64.34. That was a color change from the prior red numbers and a possible trend change. That's what we look for. Now, we go on, we see another green box, 39, and then we have a push back lower, 29. And what you notice about 29 at the cash open, that's 8:30 Central or 9:30 Eastern. What you notice is not only is it below the 64.39 print from before that, the 30-minute prior to that, but it's below all these numbers leading up to that. So the market was saying it's a little bit weak this morning based on the ETR page. Doesn't matter what the chart looks like. If you follow the tape here, the market was saying we're a little bit weak this morning. Down at the bottom, you have a mini pivot and an ETR line. What that is the most recent 30-minute open, and the ETR line is the current price. And if we go look at a live market right now, you can see the current 30-minute open hasn't changed. We're still in that same half hour. It'll change in about 3-4 minutes. And we got the S&P futures trading right at that number still, 64.27 quarter. There's 64.27 half. You can see what happens if the ETR, the current price, gets a tick above the mini pivot, it goes green. If it gets a tick below, it goes red. What we want to see on a day like today, where the market, we know the market is strong for the month, but it's pulling back off the daily open, weekly open. We want to see this ETR line first go solid green, ideally. You cancel out bonds, all right? But if we can get the S&P, Dow, and NASDAQ to go green, and then as every 30-minute line board comes on, every 30-minute print comes online, if we see green, green, green across the board for the S&P, Dow, NASDAQ, and row after row, we start painting the picture of higher prices with green boxes. That's what we want to look for. Right now, we still have an ETR line that's mixed. It's right at the open mini pivot on the S&P. We're below the open on the NASDAQ and Dow. We're pretty much right at them too, but they're not green. We're not significantly green. We have a mixed picture, a Christmas tree painted here instead of green across the board. We're looking for a strong trend. The ETR page is a great feature to find that. And it's a very quick feature to use if you're just keeping your left eye on the market. You get a broad picture look very quickly by reading the tape here with the electronic tape reader. Think about the mini pivot, most recent 30-minute open. You can learn a lot from viewing the market that way. It's a key opening price on a very short-term time scale every 30 minutes. But you can learn a lot about using a pivot by watching this ETR page. Above pivot, you're thinking long. Below pivot, you're thinking short. Now, of course, this is on a very, very small scale, but you can translate that education you learn from the ETR page to a bigger scale. How we're trading according to Tom's daily pivot of today of 64.45. We're below that. We're 64.27. below Tom's pivot, you should not be thinking bullish on intraday strategies. So if you're looking to buy this market intraday and day trade it, we really want to be above Tom's pivot for the odds to be stacked more in our favor. That's the way you think about it. And then on a weekly basis, where do we open the week? Use it the same way. Where do we open the month? Use the same way year open. And I think you get the idea. Those are the 5 features of the roadmap. I'm on Central Time once again with this ETR page, so keep that in mind. But today we've spoken about the schedule for the week. We have earnings. Wednesday and Thursday, we have news, important news of the Fed Wednesday, GDP Wednesday, PCE Thursday, employment situation on Friday. We have the end of the month. July ends on Thursday. Start of a new month starts on Friday. We can start our first 3 days process again. We talked about MTI by DTI, which is powered by all this methodology. It's very simple. Indicator you can get on Thinkorswim by going to MTI by DTI or going by DTItrader.com/futures. I'm sorry, DTItrader.com/MTI. FBAS asked, do you use both of these for futures trading? And yes, we do. We educate on Monday nights, actually, for Futures First. And you can join Tom's, I believe the link is DTItrader.com/futures if you would like to join Tom's Futures First education. We'll just check these links, make sure they work for everybody. DTItrader.com/MTI if you want to get the market timing indicator, which is the indicator inside Thinkorswim. DTItrader.com/roadmap, which is what we finished up just now talking about. And I'm going to show you one more thing before we move on, roadmap. And then, of course, DTItrader.com/futures if you want to be involved on Monday nights with Tom's Futures First education. Speaking of the roadmap here, the last feature we'll talk about, and we did speak about it, but the compass chart, you'll notice, has blue and white bars, and those are our reference bars. If you would take the time to draw lines on this and understand when the market tends to move, which in a large part is captured by the reference bars, it'll go a long ways. But here's the range from RB1 last night, 64.55 down to 64.43. They brought it up to the highs, and Europe came on board right at that time, and they had a failure. They brought it back down to the lows. We got reference bar 2, and then they broke it. Notice the difference here where they couldn't get above this high they made, so they brought it back down. Whereas down here, they got below the lows, the overnight range and the lows once Europe came on board, the Asia range, and they kept making lower lows. Notice the difference there. We had a reversal up top. We had a continuation of lower lows down below. Now we get to RB3 in the morning. Actually, we have RBX here. It's hard to see, but this reference bar right here is the start of pre-market trading in the US. And with every new reference bar comes the opportunity for the market to accelerate the trend or reverse the trend. Many days it is very clear. Some days not so clear. That's just how trading goes. But if you watch those reference bars, again, combine it with all the methodologies that Tom teaches, it's going to help you. You can't help but be helped in terms of seeing the market following this process, reference bar process, the DTI method. Once again, we're still hanging out here. in that 64 to 20 to 30 range. I've got an alert set at 64.35 on the S&P futures. And 23.550, 23.550 on the NASDAQ futures. We're trading Monday. We're trading inside the most recent reference bar. Kind of see how the rest of the day goes. But before we finish up, and make sure there's any questions I can't answer. Yes, we do use the wicks. The high and low of candles, including the wicks, is included in our analysis. The body of the candle can tell you a good bit about how strong the bar finished or how weak the bar finished, but the total range is very important to us as well. The high-low range, including the wicks, is very important to us. FBAS margin rates will change per broker. TOS is a little bit more expensive than some discount brokerages like NinjaTrader, but just look into it yourself, decide what you want to do, where you're most comfortable trading, and go from there. Yes, this training is posted or is live on YouTube right now. Tom's YouTube channel, btstrader.com/YouTube. So if you go to the YouTube page and you click on the live tab, you'll actually see the live stream happening right now. You can restart it right now if you wanted to. Or you can, after we close down this Zoom room, you can soon after that, almost immediately, the recording is available on the live tab. And if you're over there on YouTube and you're tuning in, thanks for being here. If you've enjoyed today's content, I know you haven't seen Tom that much today. Came on briefly to give an AMD trade, which I'll repost again. Tom's teaching a class in Jacksonville today and tomorrow, which is why his time for training trade has been a little bit limited today. But hopefully you've enjoyed the content we've given you today on Tom's education. Be sure to like and subscribe to the channel if you do enjoy the content and you want to see more of it over there on the YouTube page. Just going to throw up a timer. I'm going to throw up another 10-minute timer, answer some questions for the next 10 minutes, and then we're going to come back and finish up. I'm going to briefly talk about Tom's T-Buzz weekly trade letter, and then we're going to shut the presentation down and go to lunch. But let's give it 10 minutes. I'm going to answer questions during this 10 minutes, and then talk very briefly about Tom's T-Buzz weekly trade letter, which is issued every Monday after the close. All right, I've got the AMD posted again that Tom issued. That trade is part of the Moonlight Trading Club process or program from Tom. So if you're in that program, you get updates. Tom is targeting 94 cents. Let me just post again. Tom's targeting 94 cents to a dollar on the trade. Or if you want to think about it this way, Tom is targeting around 20 to 25% above entry. So whatever you pay, Tom wants to get out 20 to 25% above entry. All right, I've got the slides posted again, the AMD trade posted for those that needed that. Hey, Brandon, you're approved into the Genesis Telegram channel now. Thanks for letting me know here in the chat. Once again, yes, the recording is going to be available on YouTube here in just a few minutes. Once we close down the room, it's actually available now. You can, YouTube's pretty nice. You can actually, restart it. If you just tuned in and you just want to start from the beginning, you can actually do that on the YouTube channel and start over while we're live. But it's going to be available. The recording's going to be available on the live tab when you go to their YouTube channel. It's pretty clear. dtitrader.com/YouTube. You've got tabs across the top for home, videos, and live. Go to the live tab and you'll see the recording from today. There was no sunrise buy signal today. If I show you the sunrise real quick, this was a sunrise posting this morning. There are two things you should take from this. You can see that the S&P and NASDAQ are mixed. One says out and one says long. The most important thing you can do with this sunrise posting for those that are in the sunrise program is you can make note of the actual numbers, RBHH and RBLL. If we can get the QQQ back above 568.87, and we can get the S&P, the SPY, back above 638.39, sunrise from this morning is saying that's where you should be more actively considering buying the market if we can get that both to happen. So sunrise isn't just a one-off posting. If you do a little extra work and you mark down the numbers it tells you on the HH and LL columns, you can use those, you can use that pivotal range from sunrise for the rest of the trade day. iPhone Dan, you'll have to type in your question on Amazon again. I'm not sure what you're asking. We had a lot of questions that come through. If you're still here, just type in your question on Amazon again, if you would, please. We talked about sunrise. Let's talk about Genesis, the Genesis telegram, which happens at European close time. We look at the Genesis posting. What do you see down that LSO column? You see a bunch of outs, all right? What do you see over here? You see that same 638 number and 568 number on the QQQ. So Genesis is lined up nicely with sunrise. Today's taking a little patience. We won't trade it unless we can get above those numbers on the S&P and the NASDAQ. So Genesis is saying the same thing that sunrise is this morning. Stay patient. Wait for the market to firm up. And that's probably the hardest part about trading is waiting for the market to show you the higher odds possibility. iPhone Dan, repost your question on Amazon. There's too many questions and mentions in the chat for me to go dig yours out. Just repost your question. Donna, on the Genesis table, the color coding on the HH just means that the reference bar Y, the current reference bar high, was higher than, or excuse me, the 638.39 price is the highest reference bar high of the day. If we get above that, it would be green and looking good. That's all that means. Focus on the long, shorter out column. If it says long, it'll be green. If it says out, it'll be yellow. If it says red, it'll be short. John, Sunrise is pre-market and RB3. That's right. If you're not making money after 72 hours on the AMD trade, abide by Tom's 72-hour rule. Okay, iPhone Dan says Tom's buy price on Amazon from the 10 tickers was 233.55. And he's saying that, let me go bring up the 10 ticker list for you all to see that. Hang on, where is that at? We had a slide for the 10 tickers during today's presentation. Let's go find it. Thanks for reposting, by the way, Dan. 10 tickers for the week. Amazon, 233.55. Which RB3 did go above today, but if we look at the chart of RB, so here's the thing. These are great numbers from Tom, but you still need to use some thought process while we go through it, right? What has the S&P not been above all morning? All right, that's forget about the actual individual stocks. Think about the bigger picture, which is what we started with when we talked about MTI education and roadmap education. We talked about the bigger picture. And so part of that bigger picture is Tom's pivot for the day. If I bring up a chart of both Amazon and the S&P futures, first of all, we know it's Monday. That's, number one. And then if we look here, let me share the roadmap screen again. Here's your cash open reference bars, RB3 on the S&P, which opened about 28, and the the Amazon, excuse me, which opened about 33.5, right around Tom's pivot number. So what we have this morning, we had a situation where the individual stock was at or above Tom's number, but the S&P itself was below Tom's pivot. You always got to use caution when you see that. Doesn't mean you can't take a trade, but it means that the odds are a little bit against you. The other thing I would point out with Amazon is I would be cautious especially on Monday mornings, but generally speaking, the first 30 minutes of the trade day, you should be cautious from 9:30 to 10. And that's a little bit more amplified on Mondays when we start a brand new week. And you add in the fact that we were below Tom's pivot and you have a use cost situation. So ideally, you'd want to let the entire reference bar form and go from there. And hopefully the broad market is above Tom's pivot at that point, and then you can fire off and go with it. But look what happened on Amazon. We're still trading inside the range from reference bar 3. This goes back to the very simple pattern of you wanted to see a higher high, higher low, which we didn't see off the reference bar. So all this education adds up to hopefully creating a clearer picture and a landscape that is far from clear when it comes to trading the markets. But it's all repeatable education. It takes, you got to sit down, you got to think about things every day, which is the hard part. But if we get that S&P above 64.45 times pivot, we get the NASDAQ playing along with it. Odds are going to be much more favorable for going higher. And then if the Amazon can get back above that 233.55 level, or whatever reference bar, if you want to probe it sooner than that, at least make sure it gets above its most recent reference bar, which on the Genesis bar, that is 233.43. So you can still use that 233.55 number. But again, the markets have to firm up a pretty good bit here before we get the odds more swayed in our favor. So hopefully that helped a little bit. Let's do this. Let's finish up today's session. Let me make sure I've got the right screen sharing. Tom's T-Buzz weekly trade letter is released every day, Monday after the close. Every day, Monday after close. What it is we deliver an actionable breakdown of the markets right to your inbox. Actually, it's posted inside Telegram, and you get an email saying it's been posted as well. And you actually go read it on the One Click Trading website. So you get a notification via email, text, and Telegram saying the T-Buzz weekly trade letter is ready for review. And then you head over to One Click Trading to read through it. Tom will give a brief broad market update, what he's expecting for the week. We'll give you key news. We've talked about those key news. It's a big news week for sure, but we talk about the key news for the week. We talk about key earnings for the week. We're right in the heat of earnings season. Tom gives his weekly Magic 5 stocks, which includes trigger numbers and targets. Now, these weekly 5 Magic stocks could be some of the same from the top 10, or they could be additional stocks from his top 10 tickers for the week. And he narrows down his focus to one special opportunity for the week. I think last week was Bitcoin. I believe. I can't remember exactly last week. Sometimes the weeks run together in my memory. But he gives a special opportunity for the week. Something that if you wanted to focus in on one asset alone, that's what that's for. We do have it in the Telegram channel. So be sure, if you do join, be sure to get involved with that Telegram channel when you can. And the best part is it's only $9.99 for the year. So $9.99 for the year. And if you want to join this today and get today's update, you can go to dtitrader.com/weekly. Or you can always call us at 904-706-3532. So that's dtitrader.com/weekly, or give us a call at 904-706-3532. That's for the T-Buzz weekly trade letter issued every Monday after the close, soon after the close. So let me just repost all the links we've posted today. MTI by DTI is dtitrader.com/MTI. That's to get the MTI indicator, which goes on your Thinkorswim platform from Schwab. The Roadmap software, which is Tom's standalone market analysis software, is dtitrader.com/roadmap. Tom spent the last 25 years building that platform out. Includes all the features that he couldn't find anywhere else. So he found himself a programmer that could do it for him. Pretty unique there in that sense. Futures First Education is tonight at 7 p.m. Eastern Time. If you want to get involved with Tom's Futures First Education, you can go to dtitrader.com/futures. And the T-Buzz weekly trade letter at only $9.99. Released every Monday. That's for the year, $9.99. dtitrader.com/weekly. Today's edition will be posted soon after the market closes. If you want to get involved with Tom's newest program called Sunrise Signals, the link is dtitwitter.com/sunrise, I believe. I'll verify that. Yeah, dtitwitter.com/sunrise. iPhone, Wayne, the T-Buzz Weekly Trade Letter is posted for review inside the One Click Trading membership area. We send you a notice that it's ready for review. We send that notice via Telegram, email, and text message. I want to thank everybody again for being here this morning. I know you wanted to hear from Tom. Tom's tied up with his class there in Jacksonville. Just a reminder, on Tuesday, Wednesday, and Thursday, Tom will be trading the SPX live at 11 a.m. Eastern Time. And in fact, let's the recording from today, go to the live tab at dtitwitter.com/YouTube. Before we wrap it up, let's go look at the schedule for the week one more time. Connect the dots tomorrow at 10:45. SPX trading tomorrow at 11. Wednesday and Thursday is the mid-year strategy class. Wednesday and Thursday also at 11. SPX trading. Tom has a market update Wednesday afternoon at 4 p.m. followed by the big weekly update Wednesday night at 8 p.m. On Thursday, we have the Academy Open House at 10:30. SPX trading again at 11. Advanced Futures Education at 4 p.m. On Friday, we have 10:30 live flash meeting. 11 a.m. starts August. So we do this train and trade starting in August every trade day of the week at 11 a.m. Eastern Time. That starts on Friday. Followed by the weekly wrap up on Friday as well. The Genesis algo is just go to dtitwitter.com/Genesis, I believe. To get the Genesis algo. Yeah, the Weekend Profits Club program is a great program. Different strategy than Sunrise and Genesis. That's a strategy to target profits over the weekend, essentially, on the XSP. Great program. All right, thanks, Carrie. Thanks, Yasmin. Thank you all for being here. We're going to finish up. Go to dtitwitter.com/YouTube and look at the live tab for the recordings of this session and anytime Tom is live on YouTube. If you're in a specific program and you're looking for like a masterclass recording, go to oneclicktrading.com and go to that respective service section. Like for Weekend Profits Club, go to the Weekend Profits Club section, and you're going to find all the masterclass series videos there and education videos there on the One Click membership website. So everybody have a great rest of your day, and again, thanks for being here. We'll see how the market unfolds. Remember Tom's pivot on a daily basis and go from there.